Hello and welcome to another update video about Ethereum. We saw a bit of a spike here to the upside. I did warn you that, don't want to say warn you, but I made you aware that, typically towards the end of the weekly candle, you do see some volatility after the whole weekend was quite boring. So we see a little bit of a spike here to the upside. We try to break free outside of that triangle we identified, and we were waiting for a sort of impulsive move, and I did highlight in the previous video that there will be a decision. Yeah, it's moving into the apex of a triangle, and actually, the buyers and the sellers, they need to make a decision here. So far, the triangle doesn't need any change in wave count. We haven't broken the C wave high. We haven't broken the A wave high. We're still moving in the range. What it has done though, it broke out of this triangle shape. Yeah, out of this sort of trend line shape. Now, we need to see how sustainable that is. I currently avoid to relabel the triangle. At present, what could be, because triangles do this sometimes, it could be that this is now the end of the B wave. And if it now breaks down below the last low, so we talk here about, $1,900. If it breaks below that, I think that would be a good indication for a beginning of the C wave down here. Yeah, we've been talking about that C wave now for a while. Support here is in the region between 1533 and 1754. Yeah, with 1663 in between. That's the 61.8 Fibonacci retracement level. So it is possible that it's stopping here. Yeah, it would be a good place to stop with this triangle, that the Elliott Wave triangle breaks to the downside. Now, you need to understand that such a triangle, if it's an Elliott Wave triangle, it doesn't need to stay within its trend lines. They are only for, you can use them as orientation, but a triangle doesn't need to end within the trend line. So it could very well be that, it spiked now, but that could just be a high E wave in the triangle. So, as I said to you before, as long as we stay below 1963, this triangle is valid as it is and could break down. Only, it might need a bit of a relabeling of the subwaves, but that's it. Now, if we break above 1963, then we're looking for something different. Probably not a triangle, or a triangle but labeled the other way around, which is also possible. But that would be the idea or the scenario where we get a high B wave. Like, basically like that. That the B wave is a bit higher and goes into the standard Fibonacci retracement zone for the B wave. B waves can be difficult. They can go even higher than that, but you can use that level or that range as orientation. And if we start to see this becomes more clear, that we will get that high B wave, then we can look at more specifically at where it will most likely go. But for now, this is standard Fib resistance for a B wave between 1973 and 2067. But resistance should be clear by now. 1963 is the invalidation point for the triangle. Above that level is the red box, which is highly relevant. And if we now break below that $1,900 level, then we have a first good indication that we eventually will come down here in the C wave and that we started that move to the downside. That's everything for now. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.